What's good, everybody? Hopefully you guys are doing good. So we are back today for another video. Before we begin this video, I would like to suggest, if you guys are not already following on Twitter, what are you waiting for? The fun never ends. Link will be in the description below. This is the best way if you want to send messages. If you have a video request, go ahead and let me know. That's the best way I can respond quickly. It's easy. And right now we are currently at 268 followers. We're growing quick. And on here I'll post numerous things, motivational, finance related. And you can see my dividends. I will post when I get dividend payments, just so you guys can see how this thing works and that I actually do invest, and this is not some type of fluke. So in case you're not following, go ahead and check me out there. Alright, now let's begin the video. Alright guys, so today I had a request from a follower. He wanted to see what my thoughts were on purchasing gold. I'm going to keep his name out of the video for his own security, safety, privacy, all that good stuff. However, he mentioned that his strategy involves purchasing gold. Now, there's nothing wrong with that. Everyone has their own choices for how they want to diversify and build assets. I'm going to give you guys some of my thoughts, give you different angles so that you can decide for yourself if this is an angle you want to go down or if you have different strategies. Now, before we continue, this is not financial advice, it's not investing advice, this is not wealth building advice. This is all for fun and entertainment purposes only. You are required to talk to an expert, do your own research, and don't listen to some guy online and go make financial decisions. Always, always, always do your own homework. This is only for fun and entertainment, and I really enjoy making this type of content just to share some thoughts. But that's all it is, just my thoughts. Do your own homework. Now, you guys are lucky because back in the day, when I was curious, my high school days, I did a lot of research with currency and finance and gold. So I do have some understanding of what happened and why we're where we are and the issues that we currently face. So we have to study the history of gold. What the hell happened? Now, at some point, you could go to the bank and give dollars for gold. Did you know that? Yes, it was legal. You could do it. And then a few things happened where that was no longer allowed to happen. Now, this is from US Gold Bureau. This is not sponsored. None of these things that I'm mentioning here are sponsored. They're just good. They're good sources that can help you better understand what happened. All right. So in 1933, President Roosevelt's executive order required US citizens to deliver on or before May 1st, 1933, all but a small amount of gold coin, gold bullion, gold certificates owned by them to the Federal Reserve. Now, the Federal Reserve, I believe, was founded in 1913, 1917, right around that time. The Federal Reserve was founded. Federal Reserve is in charge of the whole monetary system. They're privately owned. Again, I can make a whole video about the history and all that stuff, but just to keep it simple, try to follow along. The Federal Reserve was established, and then this came out about 10 or 15-ish years later. Now, this is pretty crazy. Look at this. Under executive order of the president issued April 5th, 1933, all persons are required to deliver on or before May 1st, 1933, all gold, gold bullion, and gold certificate now owned by them to a Federal Reserve bank, branch, or agency, or any member bank of the Federal Reserve System. That's pretty insane. Can you imagine that today, guys? If there's an executive order that required people, they have to turn in physical metals or whatever else. Depending on how you look at it, some might say, hey, if it's for the good of the future, for the currency, we should do it. But on the other hand, some could also say, hey, that's kind of an overreach to have seizure and assets and all that crap, constitutional stuff. Again, I spent many, many hours on this. I looked at many, many different angles, but just try to follow along. So that's kind of what happened in 1933. Now, under the Trading with the Enemy Act of October 6, 1917, violation of the order was punishable by up to $10,000 or up to 10 years in prison or both. So, no pressure at all to turn in your gold. You might get a $10,000 fine, which back then was a lot, and you might be in prison for 10 years. Now, on 1934, the Gold Reserve Act of January 30th, 1934 required that all gold and gold certificates held by the Federal Reserve be surrendered and vested in the sole title of the United States Department of Treasury, and changed the value of dollar in gold from $20.67 to $35 per share. So try to follow along. Remember, early 1930s, we had this executive order, and from that time until about 1970s, we had various things being passed to try to limit gold and focus more on a dollar-backed currency. Now, 1971, the price of gold remained fixed. So from 1934 to 1971, President Nixon, this was a huge turning point, was in 1971, President Nixon announced that the United States would no longer convert dollars to gold at a fixed value, thus abandoning the gold standard for foreign exchange. So that was the game changer, because at that point, that helped with inflation, right? Because if people felt that their dollar wasn't being valued and the stock market was kind of sketchy, it made more sense for them to go maybe invest, have some gold on hand, and it was a good hedge for the currency, because that way you have it's backed by something tangible, and you can't just keep printing an unlimited amount, because you're going to lose value if people are just going to get gold and not spend their dollars, right? That makes sense. Now let's continue on here. Okay, what else did I want to go over with you guys here? All right, here we go. 1977, Congress moved the president's authority to regulate gold transactions during a period of national emergency other than war. 1985, President Reagan signed into law the Gold Bullion Gold Coin Act, which allowed the U.S. Mint to produce gold coins from newly minted domestic sources. Gold American Eagles went on to become one of the most well-known coins. So Reagan tried to kind of bring gold back into the light. However, the bottom line was you could no longer go to banks, and the currency was no longer backed by gold, which doesn't help with inflation. And as you guys know, inflation has been pretty rampant ever since the 1970s, 1980s. Cost of living has gone up, and wages have had a difficult time trying to keep up with that. Markets are extremely volatile and the volume is high. And yeah, buying gold right now can be difficult. Let's continue on here. This is another source. Now, this one isn't as academic. However, I read through it and it did have some good points. So FDR's 1933 gold compensation was a bailout of the Federal Reserve Bank. Okay. The real reason for gold compensation was a bailout for the privately controlled Federal Reserve Bank, and the evidence had been printed right in front of our faces. So during the 1800s, paper money was suspect in the eyes of many. Nobody would choose a government-issued $20 note over a $20 gold coin. Gradually, during the late 1800s and early 1900s, the Fed and easy money. Here we go, guys. 1913, an important day in history. Many will say an infamous day. Again, all for you to decide. I'm just here reporting what happened, the facts. So in 1913, the Federal Reserve was established, and it began issuing Federal Reserve notes the following year. Once the restrictions imposed by limitations of available physical gold for coinage, the quantity of dollars in circulation increased dramatically. The increase was mostly in form of paper money. Now, some say that also led to the Roaring 20s. Again, up to you to decide. So here's what's interesting, guys. Before, you could see here on the this is the back of a dollar bill, United States of America, $50 in gold coin, payable to the bearer on demand. At the close of the Series 1928 gold coin certificate looked like this. So this was something that you could do. You could actually go trade your dollars for gold. Now, it's kind of crazy to think about because you can't. Redeemable in gold on demand at the United States Treasury, or in gold or lawful money at any Federal Reserve Bank. So that kind of gives you guys a brief history of gold. Gold was used as a hedge against inflation. And as you guys can see, the debt has been just skyrocketing. It was about $1 trillion, and then increasingly over time, it's continued to drop and keep going up in how much we're in debt. We got a lot of debt. Now, they're saying potentially there might be another gold compensation, but that goes in the realm of conspiracy. I'm not trying to get in that realm. So just to keep it simple, Federal Reserve was established. Gold at some point could have been used as a hedge against the dollar. You could trade dollars for gold. Now you can't. FDR took the United States off the gold standard, and then in 1970, Nixon completely got rid of it altogether, and that's kind of led to, in part, to inflation. The government held the $35 per ounce price until August 15, 1971, when Nixon announced the United States would no longer convert dollars to gold at a fixed value, thus completely abandoning the gold standard. And then in 1974, Gerald Ford signed legislation that permitted Americans to own gold bullion. That's insane. Can you imagine it being illegal to own gold? It just shows you how much they wanted to get the currency up and running and how serious they were about it. Why did the U.S. abandon the gold standard? Alright, so yeah, to monetary system directly links currency value to that gold. So basically, you guys got the gist of it. I can make a whole hour-long video on this thing, but keeping it simple, dollars were backed by gold, no longer backed by gold. We're just mainly printing money out of thin air at this point in time, and the currency is just backed by the US government saying, hey, $1 is worth this much and you can do this with it. That's about it. Now, what are gold prices at today? Right now, it's about $1,942 for 1 ounce of gold. And quick disclaimer, I don't really own physical gold coins or any of that stuff. It's just not my personal investment strategy. It does not fit with what I'm trying to do. Now, the price has gone up over time. Gold prices are continuing to go up, as you guys can see here on this chart. It spikes and then it drops and then it spikes and then it drops, but in the long term, it just appears to be going up. And same thing with the price of silver as well. Silver is about $27 for 1 ounce. It dropped about 3% today. But in the long term, the price is going up. And this is one site, Kitco, not sponsored, none of that stuff, just a random site I picked where you can buy gold coins and all that good stuff. Gold, silver, platinum, palladium, different types of precious metals. And these are actually pretty expensive. I looked at them, they're a couple grand. Now, for me, I don't really look at it too much. Gold prices decline, look to post first weekly loss since early June. Analysts refer to gold's price action this week as insane. Yeah, for a while there, gold prices were going pretty crazy, if you guys were paying attention to it. Now, what else do we have here that would be able to help you guys out? Precious metals trading, yeah, so it's almost at $2,000 for one share, which is pretty insane. The U.S. reported sales after 1.1 decline in Chinese retail sale in July. Looking ahead, gold traders will continue to monitor the possible emergence of a second wave of the bug. And yeah, also too with people, if they lose their faith in the dollar, they might just say, hey, you know what, I'm going to invest more in precious metals. The dollar and inflation is out of control. Gold can be a good hedge for it, or silver. Now, here's another thing as well. There are stocks, silver stock and gold stock. I am not currently invested in any of them. I have done some research into them, but once again, they do not fit my investment strategy. Therefore, I don't own any at the moment. In the future, I could, but I'm just not interested. So this one, for example, is iShares Silver Trust, ticker symbol SLV. It's about $25 a share. It's been trading since 2006. It has no dividend yield, market cap of $15 billion, so it's pretty small. Now let's shift over to gold here. Spider Gold Trust, ticker symbol GLD, 78 billion market cap, so it's much bigger than the silver one. It's been around since 2005, and as you can see, the price has gone up. It's dipped, but in the long term, it looks like it's going to continue to go up. Another one is SGOL ETF Gold. Same thing. It's about $18, $19 a share. It's continually gone up. It's been around since 2009. No dividend yield. And we got VanEck Vectors Gold Miners ETF. This one has a dividend yield of 0.48%. 17 billion market cap. Been around since 2006. Now, in case you guys are wondering, if they don't pay a dividend, is it basically game over for me? At this point in time, yeah, it kind of is. With everything going down, if a company can pay you a dividend during these times, that's something that fits my strategy, and I'm more interested in doing that versus buying these that don't pay a dividend. And then also, here's an example of one that does. GLDI, CR, Swiss, AG, whatever. It's headquartered in Switzerland. Been around since 2013. It's going down though. And there's no market cap, there's no PE ratio, there's not a whole lot of information. And also we have GOLD, Barrick Gold Corp. This one is actually the only one that I'd be interested to even look at from what I showed you guys here. Now, this has been around since 1985, which is a long time. The chart looks decent, not great, but it's decent. 47 billion market cap. It does have a yield of 0.60%. That's the only positive for me if I was to even look at this thing. It's a leading mining company that produces gold and copper with 16 operating sites in 13 countries. It's headquartered in Toronto, Ontario. Now, as you guys know, I like to use a dividend screener whenever I'm doing my research. This is only one tool. I obviously do a lot more research, but for the sake of keeping the video not crazy long, I'm just going to use this one to simply save dividends. Again, not sponsored. This is what I'm using for now. So the GLDI, the one I was telling you guys earlier. So I come here and there really is not much information. The, dividend yield has not been increasing. It's on decline. Look at this. It's not consistent, guys. I don't like this. I want to see a dividend yield that increases continually over time. That is my, oh, it does pay monthly though, so that's a positive. But like I said, risk reward factor. This is kind of risky for me, and I'm not interested in going after this one at all. Now, here's something that might be more catchy for you guys. The Barrick Gold, the one that I was talking about, that if I was even to look at any of these, this would be the only one that I might even look at. Dividend yield is 1.2%. The dividend is borderline safe. However, the dividend growth is very fast. 47 billion in market cap. The price is currently 27. Now, this has more information. See, this is what I'm talking about, guys. This has more information. I can see some numbers. I can see some sales. And the dividend growth is not very good in the past 5 years and in the last 20 years. Again, this is why I wouldn't prefer to invest in this. And they pay quarterly. Their chart is decent, but they've only been paying since 2017. 3 years without a reduction, 3 years of consecutive increases. But like I said, I have more information to work with. So if this was a stock that I was interested in personally, I would have to go through all this stuff, go on the website and spend hours to kind of see, okay, am I going to put money in this or not? Like I said, I do not own this stock. I do not plan on owning this stock, but just something for you guys to consider. If gold is a route you're going, these are things you kind of want to look at. Now, what is my strategy? I'm going to end it with this because I don't want this video to get too long for you guys. Dividend Kings, this is a much easier strategy for me. And over here, there's some dividend paying companies. Altria, here's the top 10. Altria, Lowe's, Target, Emerson, 3M, Parker, Hanfin, Johnson & Johnson, Commerce, Bankshares, Inc., Colgate, Palmolive, Genuine Parts. And it kind of breaks it down by shareholder yield and dividend yield. As you guys can see, most of these, it's anywhere from 1.5 to about 3-4%. Altria is kind of the outlier with 6.7%. But this is a strategy that I do more research into. I'm more focused on spending my time studying these companies and making decisions based off of that. Quick disclaimer, I do own Altria, I own Emerson, I own 3M, I own Parker Hannifin, Johnson & Johnson, Colgate. Those are all companies I'm invested in that are in the top 10. Now, in no way, shape, or form is that financial or investment advice. That's just what works for me and my strategy that I'm currently focused on. All right, so hopefully that video helps the individual who sent me the message about gold. So also too with gold, I don't like having physical gold. I think that that's more risky for me. Imagine one little gold coin or one bullion is a couple $1,000s, and you buy a few of those and you might have $5, $6, $7, or $8,000. You lose it. God forbid someone comes and takes it. That's a huge hit. But in stocks, as far as I know, it's kind of hard to steal stocks. Last time I checked. Again, that's just me. Anyways, thank you for asking that question. Hopefully that helped. Thank you guys for stopping by. Hopefully you guys have a great Friday and enjoy your weekend. Try to be productive. Go to the gym. Do something. As always, thank you for watching. That's going to be it in this video. As always, if you're not subscribed, don't forget to subscribe. And if you like the video, don't forget to give it a like. Until next time, peace.